Hi, this is Eric Snell from Vanilla Equity. Today we're going to talk about unethical investing. And it's something that I've been looking at sort of from a distance at all times. And I remember I've been working in a bank for over 20 years. And I remember seeing all these banks creating their funds and then changing the names over the years. And there's always been these trends. So there used to be a fund that was called even the Ethical Fund. Nowadays, they have renamed them. So it might be an ESG fund or a social responsible high yield fund. And these come with trends. And in one way, it makes sense. You have to imagine that people go into a bank and the bank is asking, okay, how much risk are you willing to take? And what are your interests? What would you like to invest in? Would you like to do some responsible investing? And it might be that a client says that yes, they want to stop deforestation in the world, and they don't want to invest maybe in companies that pollute. I remember a long time ago there was a question about all the production that was done in China and in Asia. If there was child labor, then we can't invest in that. Of course, you have to make the rules yourself, what is ethical and what is not. But it's sort of a trend following. So that forces sometimes companies to invest in unprofitable business. So a fund company that has in their prospectus that, okay, we're going to invest only in solar energy. Now, solar energy is not that profitable, and it's actually difficult to invest and diversify that investment because maybe there's not that many publicly traded companies, and they're not that different from each other. But I also remember when I was in school, there was some guys that were a little bit older than me, and they had a mobile phone company, and they were quite successful. So they decided that, okay, they're going to create an investment company where they put their profits, and the only thing they're going to invest in is unethical stocks. And that meant gambling stocks, that meant tobacco, that was arms dealerships. And that way they could actually invest in stuff that, people actually want to do, and there's a lot of money in it. Especially, let's say, in gambling. A lot of countries, it's not possible to offer that type of service in the private sector. It's the public sector that takes care of it, and usually it goes then to welfare, and it's used for good purposes. But in some countries, it's perfectly legal to start a gambling company. You have the online gambling, which is very popular, and I've been looking at, for instance, the MGM stock with this in mind, trying to see who's going to really prevail, and when all the lockdowns are over with, where do people want to go to gamble and to spend their money? And because it's gambling is mathematically profitable for the house always, it's almost like a risk-free investment. But then you have this problem that if every institutional fund promises not to invest in these companies, then they won't get the money in that they need. You have to think that companies go public in order to raise money. So if you can't get people to buy your stock, you won't be able to raise that much money. But then again, if it's profitable, people are still going to buy it. So maybe your local bank, when they offer you 10 different funds, they're going to have a North American fund, Asian fund, then they're going to have the ESG fund. So maybe they won't invest in MGM because of this, but there will still be money coming to them through maybe a hedge fund or through other funds. So there is a lot going on also that private individuals will never see. So when we look at the trends, we can see, of course, that all the banks will offer you exactly the trend word. If you look for the most trending things, like if it's maybe female entrepreneurship, you might find a fund that will say, okay, we invest in that, we believe in equal opportunity, so we just invest in companies where the managing director is a woman. And you can also imagine that what would happen if Apple would announce that they're looking for a new managing director and it has to be a woman. So that could have two different effects. Though one that cares about profitability and doesn't look at the gender will say, well, we don't care as long as it's profitable. But then you might have people that just invest, let's say, with their heart and say, well, finally, equal opportunity for women, we're going to invest in that. And you can see this in a lot of countries where they have presidential elections. If you haven't had a female candidate, you're going to have that once. And that first time, that they're going to get a lot of votes just because of their gender. And it's interesting to follow, and it's interesting to keep that in mind when you're investing, because sometimes these very unethical investments are very profitable. And one such investment I come to think of is Lockheed Martin, the arms manufacturing company. They've gone up 35% in 2022. And so when you think, okay, the war started in Ukraine, I'm thinking about, okay, it's going to be tough times. We're going to invest in McDonald's and cheap products because people are going to run out of money. You're going to invest in Dollar Tree. But then you have the flip side of the coin. Well, who's going to make money? Well, we're going to need a lot of military production. There's going to be a lot of countries also want to amp up the military production. The budgets for the military will go up in almost every country because of this. They can see that, oh, there's a risk here. Maybe we have to prepare a bit. Maybe we have to be prepared to defend. And they're going to invest money in that. So a lot of times our nature will think about the consequences sort of from not a business-like view, and we should actually consider, like, okay, well, what do we need for military purposes, and then invest in Lockheed Martin. Well, I haven't done that investment. That's up to you if you want to do it.